Hi, my name is Andrew Masters and I'm an analyst at fibogroup. In this video, we'll talk about oscillators. When there is a trend movement in the market, everything is simple. We already know the variety of the trend indicators and introduce how to use them. In addition, there are many books and information on the internet which can extend the range of your knowledge. What can we do when our lows and highs are not being updated? When there is a flat in the market? In such cases, the oscillators we have mentioned earlier help us. Oscillators are an indicator that oscillates. It varies around the zero line or in a range from 0 to 100. The main purpose of oscillators is to show tops and bottoms from which the market is likely to start off and to go to the reverse end of the flat or by the trend or to a trend reversal. This is a technical indicator that shows the state that the overbought of the oversold market. When the oscillator reaches the maximum value, the market is in the overbought state. Oscillators by themselves are secondary in the Forex market. Any of their signals requires several confirmations, and they should not form from the other oscillators, but from the indicators of the trend models that are independent of them. One of the most popular oscillators is the stochastics. Stochastics oscillator shows the position of each closing price in the previous interval of maximum and minimum prices. Stochastics oscillator consists of two lines, the fast called the K and the slow called the D. Analysts performed with the stochastic oscillator sets the closing price location against the price range over a certain period. The most common calculation period of the oscillator is the 5 days. Short period of the stochastic oscillator can help to detect more turning points, and the long period helps to detect the most important turning points. Stochastic oscillator allows the set in percentage terms from 0 to 100. The place of the last closing price in general, range of prices for a certain selected period of time. If the obtained value is higher than 80, the closing price is near the upper limit of the range. If it's below 20, it is respectively near the bottom limit. The second curve D is the 3-day smooth modification of the K curve. K curve is shown on the chart with a continuous line, and a slower D curve is shown with a dashed line. The stochastic oscillator forms 3 types of signals arranged in a descending order of importance as follows. Divergence, stochastic oscillator line level. Direction, stochastic oscillator lines. Bearish, diversion occurrence when the D curve is higher than 80 and forms 2 peaks and the prices continue to rise. Stochastic operator bearish divergence. Bullish divergence is formed when the D curve is below the 20 and forms a double rising base, and the prices continue to fall or stay the same. Stochastic operator bullish. Bullish divergence is a buy signal formed when the stochastic oscillator falls below a certain level, usually 20, first, and then rises above the level if the K line of the stochastic oscillator rises above the D line. The buy signal is formed as well. Stochastic oscillator, buy signal. A sell signal is formed when the stochastic oscillator rises above a certain level, usually 80, first and then falls below that level. If the K line of the stochastic oscillator falls below the trend line, then this sell signal is formed as well. Stochastic oscillator sell signal. Calculation 4 variables are used for calculation of the stochastic oscillator. K periods. The number of individual periods used for the calculation of the stochastic oscillator. K delay periods. A value that determines the internal smoothing of the K lines, where value is created by a quick stochastic oscillator, and a value of 3 is created by a slow one. D periods. The number of individual periods used for a calculation of the moving average of decay lines. D method, smoothing method, exponential simple, smoothed or weighted. That is for calculation of a D.